Hello guys, welcome back to another video. So in today's video I'm going to be explaining another two important features in the fractals, which is splicing and the cycles. Starting out with the splicing, we have the splicing data right here. So basically what splicing does is that it allows you to use certain days of data. What I mean by certain days is that, let's just say you only want to look at the Friday splicing. What I mean by that is that you only want to look at the past Fridays that have formed. Now you have the freedom to choose any amount of days of data you can load. Basically, let's just say I want to look at the past 1000 days and I only want to look at the Fridays. So you can actually do that. Right here you can see this image. We have the April Fridays, May Fridays, June Fridays, July Fridays right here. So you can actually do this splicing to actually figure out your bias for the next coming Friday or any data set you will choose. Let's just say you choose Monday, so you can choose for Monday to Monday and you can decide your bias with that. Here, it can also be used to actually figure out the open states. It is very useful because these open states are really good as actionable targets. Because, like, I've seen that with the splicing, these double bottom setups work really good. Also, all the other things in the splicing data you use is actionable. What I mean by actionable is that it is not skewed. Let's just say that you want to look at the spread monster with it. Okay, you load 1000 days and you look at the spread monster, it's gonna come out the same like we have with the wave 1 daily, 200 days to load, which is normal, right? So this data can also be used along with your normal data, which is wave 1 daily, let's say. So you can actually use Friday or any day splicing to actually figure out your bias with the spread monster, right? The odds and everything work really good with it. Now I'm going to be showing you that how you need to access the splicing data. For that, I'll go into the fractals and actually show you guys one example. Right here, I'm going to be showing this example for QQQ. Right here, you see this option splicing, right? Now I click on it and I want to, let's just say, decide my bias for Tuesday. So I will click on Tuesday and add wave 1 daily 200 days to load. Done. Then I also get the freedom to choose any amount of days I want to load. Right here, I want to load for Tuesday, Wednesday, Thursday, Friday consecutively. I can do that. But here, if I want to decide my bias really, I'll only use Monday, Tuesday, and Tuesday. Right? Done. But of course, we're gonna have Monday coming up, so I'm gonna be showing you the bias for that and what we have with the splicing for upcoming Monday. Right here, this was the previous Monday that formed on 5th of August 2024. Right now, I'm gonna be showing you what is possible for the next coming Monday. Right, so for that I need to have certain amount of data right here. Now I think so this data is enough, right? We are currently sitting at 435.37, am I right? So on 12th of August 2024, which is the next coming Friday, we should be above the pivot because the current price is near 450, am I right? So we should be seeing the price forming near this cluster right here. We are already above the 80% band, so seeing more upside means that we need to break some clusters right here. So it's gonna be hard upside coming on Monday. Okay, we can also see sideways data. It depends on the OMM and the MM data we see for that day. So that is for another day because we are gonna have another video coming up for the MM data, that how you can use it to decide your bias, how you can use it to actually take intraday trades and really awesome trades with it. Okay, now here I'm going to be using Monday, Friday. Basically this is Friday, right? This is 9th of August 2024. This was the Friday that formed, but here I want to use the 500 days to load. Oh, okay, so here I see that we are rejecting from the mean wave, so the upside is already looking not so good. To actually see some upside, we need to get above 453.42 at least, so that then we'll have a chance to actually get to 457.36, right? So what did I decide by using this splicing data? Basically, first of all, we are in a probable area of reversal because we are rejecting from the mean wave, right? Even if, let's just say that we break the mean wave and we get above 453.56 or 453.4, 4 2 area. Then we have the open state. So basically, I decided my target, I decided my area of reversal, which is the mean wave, and then let us look at the odds that we have for the next coming up H2. Let's say, oh, we already have less than 50% chance of H2 right here, right? So we have 55% chance of forming L1 tomorrow on Monday. So we'll see what happens. So basically, we decided a bias with it, and you guys must be wondering that, oh, if I want to use the spread monster with the splicing, so can I do that? Well, yes, you can. Let me just show you that the data is perfectly fine and it is not skewed using the spread monster, right? You can see here you got the normal data, and you also see that we have the normal odds graph. It is perfectly fine. Same with the density, it is all good, just as we have with the wave 1 daily normal data, non-spliced, right? You have the same odds. We see many traders using the white space to actually trade. That's going to be very actionable for them, and there's no problem with the data. You just need to load more than 1,000 days or around the 500 days of data to actually get enough data for the spread monster to actually load, right? So I think so. I have explained the splicing feature very well, and now you know what you need to look at to actually use the splicing and figure out the bias and figure out the open states, and of course, see the mean wave resistance right here. See, the data is just the same like we have in the wave 1 daily normal days, right? You can see here with the wave 1 daily, it's all the same, right? You can actually just use this along with your normal wave 1 daily to actually get a very actionable bias. Okay, so I think so we are done with the splicing. Now we need to move on to the next part of the video, which is the cycles. Okay, so talking about these cycles, so what does cycles actually do? So basically, this adds a time aspect in the fractals, like in ICT. I'm not comparing fractals to ICT, okay? So I'm not comparing data to randomness. So basically, in ICT, you must be seeing those cycles. Basically, you have those certain time frames where you can trade and actually get some kind of reversals, right? So same thing is right here, that you actually get data of time to actually figure out the reversals right here. Basically, we have these cycles right here. First of all, I'm going to be telling you how you can access these cycles. You need to go to your graph settings, then you have the cycle analysis right here, so you can click at show cycle analysis. And this thing, I don't need to actually just add that. I can actually show it right here. It is very simple, and there's no need of all this stuff. If you want to keep your charts clean, just click on show cycle analysis and you'll be done. All right, talking about the cycle analysis, so what it does is that it counts the number of aggregations we had peak to peak. Right here, you can actually see from this peak to this peak, we had 57 aggregation. So what it means is that we had 57 15-minute candles from this peak to this peak, right? Now below the pivot, we have trough to trough movement. Right here, you can see that from this trough, see here, right here, the arrow starts from right here, from this low to this low. We had 26 aggregations, which was the average cycle, right? You see the average cycle right here, we have the same for above the pivot, right? So the average cycle is like the mean wave. When we get near the mean wave, we expect some kind of reversal, right? Of course, we're gonna see outliners, but that is not in our control. But we can actually just use data to actually predict reversals, just like right here. We had the average cycle 26, so if you could have seen it right here, 26 average cycle, or even in the previous data, you see some reversal or average cycle near the 26. That means that, okay, you can reverse from here. This is a probable area of reversal, like right here, 13 to 13 aggregation reversal. First we form 13 here, again we form 13 and saw reversal from it. We're gonna see these numbers repeating, like right here too. We saw a reversal from 13 aggregation, then 12, then 13 and 13, then 12 again. So these numbers keep on repeating. These cycles aggregation keep on repeating, right? It is as simple as that. You see a number repeating, you see a number, or you can just say cycle aggregation near the average cycle or a repeating number. Just keep in mind that we can actually reverse from there, so you need to start looking for certain confluences for reversal. Of course, we can see outliner, like in this case, right? This was a huge cycle from this low to this low that is just formed L1 right here. This was 52 aggregation. Now you must be seeing that we have this small and red and green macro trend. Basically, this is a mini macro trend for the cycle. For example, here it is peak to peak. From this peak to this peak, we get the cycle analysis macro trend. Basically, you can actually use this along with the normal macro trend, because like this moves in coordination to this. And exactly, like if you see that here we are only forming the green macro trend, right here in the small macro trend we are forming only and only green. So this can actually lead to the change in the macro trend right here. Like for example, on smaller time frames, if we see a reversal, it will lead to a bigger reversal on bigger time frames. It is as simple as that. Just like that, this is a bigger macro trend for the whole chart, and this is a macro trend just for that macro cycle, right? So this was all about the cycles. You can actually use this just to predict reversals. And actually, if you're gonna see some kind of trending day, it can also tell you that by seeing a consistent color in the macro trend. Okay, here the macro trend takes a lot of time to change, but here you can actually use this very quick and small macro trend to actually use for intraday trading, which will be more beneficial to you guys, right? Because most of us are actually intraday traders and we trade 0 DTE options, so this can be used to actually figure out the trend. And even if a trend reversal, which is of course possible in between the day, right? So I think this is the end of the video. I explained both of the important features. Now you need to just tinker around with it when you get access to it, because like if you do not practice certain concept, of course you're not gonna completely understand it. No matter how many videos you watch, you need to practice it. All right, you need to use it to actually get the proper clarity of the concept. So thank you so much for watching this video. So I think this is the end, and have a nice day and stay safe.